The first revolution was Bitcoin. The second was smart contract platforms like Ethereum. And the third is rollups using zero knowledge. And it's completely transformational because what it allows us to do is put huge amounts more transactions and data through blockchains without increasing gas fees and using and causing more congestion.
Hi, everybody, and welcome to the CryptoWeekly Podcast, the show where we interview the top movers and shakers in the crypto industry. Today, I'm joined with Will Harborne from DeversiFi, the co-founder of DeversiFi. Welcome to the show.
Hey, Mike.
Hey, happy to have you, Will. And I think what you're building with DeversiFi is, such an amazing project. We can dive into the importance of DEXs, but first, can we maybe get a little bit more about your background and kind of your journey into the crypto space?
Yeah, so I got interested in Bitcoin like a lot of people early on, just sort of trading it a little bit in my bedroom when I was a student. But I got really hooked by the launch of Ethereum. That was kind of what drew me more into the crypto space. I started playing around with smart contracts even before Ethereum launched on mainnet. And then as soon as it went live, I went to sort of every event hackathon that I could. And in 2016, went full time into the industry. My first role in the space was working at Bitfinex, which was at the time, I think, the largest crypto exchange there was. And it had 5 currencies listed. Bitcoin, it did already have Ethereum and a few others. And my role was really as kind of the Ethereum lead there. So I was doing anything that touched on Ethereum, including starting to list ERC20 tokens, which was still new then, and they didn't have any of. And then, for example, one of my first early projects was implementing Tether on Ethereum because previously it was on another blockchain only called Omni. So I was just super excited by smart contracts, essentially. The fact that you could build anything and implement it and have it run forever on Ethereum. And since then, followed that, but now building on rollups, which are kind of the next generation, I think, of programmable blockchain, which can scale to everyone in the world. And that's what we're doing with DeversiFi. And I can go into more on that later.
Sounds good. Before you get into DeversiFi, I'd like to just ask you about rollups. I mean, we've heard so much about ZK-rollups, and I understand that it's going to be, the future of blockchain and essentially adding more space to blockchain. But can you give me kind of a Cole's Notes synopsis of what a ZK-rollup even is and why it's so important to the crypto space?
Yeah, I mean, honestly, I think I think you can't really over-exaggerate the fact that pretty much in my view, it's the first revolution was Bitcoin, the second was smart contract platforms like Ethereum, and the third is rollups using zero knowledge. And it's completely transformational because what it allows us to do is put huge amounts more transactions and data through blockchains without increasing gas fees and using and causing more congestion. So we've seen demand over the last 2 years for DeFi just grow exponentially, but the throughput of Ethereum and Bitcoin and other layer 1 blockchains is limited by a lot of things. You can obviously increase it by compromising on certain things like security or other things, but essentially there's a limit which you can't get beyond just because of the fact that you have multiple validators and nodes checking everything. And what zero knowledge proofs do is essentially allow you to take thousands of transactions and off-chain prove them cryptographically, which generates a proof which is a certain size. And actually that size is pretty constant no matter how many transactions you have. So if you have 10 transactions, it's almost the same size. If you have 10,000, it's almost the same size. And that's the only thing that you then need to submit to your layer 1 blockchain like Ethereum. And so the data you end up putting onto layer 1 is much smaller and the cost is much smaller. And so if you have, I think in the future, we're going to see many of these rollups existing on top of Ethereum and each one having hundreds of thousands of transactions going through it, which allows us to scale the entire ecosystem without compromising at all on security because that's inherited by these proofs from the blockchain. And so we're already seeing that start to happen. There's different types of zero knowledge rollup. DeversiFi is built on one, which is based on Starks, which is a particular type of zero knowledge. But there's several others as well.
Wow, I mean, it seems like these ZK rollups are almost in some way the holy grail of kind of blockchain scalability. And for the longest time, we've had this trilemma of, you know, either you have scalability, you have decentralization, or you have security, and you kind of got to pick two of those. Am I understanding that this is kind of going to blow the gates off of that analogy and, you know, allow Ethereum and other blockchains to scale much more than they can today?
That's exactly right. And people have been speaking about this now for 2 or 3 years. And it's been clear. And, you know, people like Ethereum, like Vitalik within Ethereum have said how key these rollups are going to be to the kind of roadmap of Ethereum and other layer one blockchains. But now the difference is we're actually seeing it start to happen. The applications are going live over this year, and they'll keep going live. And so it's kind of no longer just theory, it's happening in practice, which is the really exciting sort of phase, obviously, because you can actually go out and try some of these rollups.
Yeah. The more I've kind of learned about this whole rollup space, the more I start to subscribe to the modular blockchain theory. And I'm not sure if you listen to the guys on Bankless, but essentially, you know, with Ethereum being the layer one, the kind of base layer beacon chain of security, and all of these other companies and projects starting to work as rollups on top of the Ethereum layer one. So in that case, it seems like the cryptocurrency industry will just continue to get more and more interoperable as more things start to settle base layer on Ethereum and start to build on layer twos and rollups. Yeah,
I think that is the way things are evolving. And you can also see parallels outside of Ethereum in, for example, the Cosmos ecosystem or the Polkadot ecosystem, where you have almost this sort of by design, whereas Ethereum is developing it organically just because of the demand. We've seen like these multiple rollups, which are interoperable, start to build up. And to begin with, it is going to be a bit fragmented because, you know, if you have one application, for example, DYDX, which runs on a rollup, which is just for derivatives trading, another one like DeversiFi, which is for you know, swaps and DeFi, another one which maybe is for NFTs. To begin with, you start to get a bit of fragmentation, but I think the future of what we'll see will be that Ethereum changes its role to be just this data availability layer, which all of these rollups are sitting on top of and putting these proofs onto. And then users would just hop between these different application-specific blockchains and rollups and use them kind of in a seamless way. And we kind of get to this multi-chain future, which is, I think, starting to be almost inevitable just with the number of, you know, the kind of wide variety of things that are happening. And the great thing about that is you can then tailor also each of these environments to suit exactly what users are doing on them, rather than having one kind of monolithic chain, which is, you know, maybe designed for super high security and decentralization, but then is really expensive to use.
Yeah. The last thing I'll say on the kind of roll-up space is I heard a really interesting quote the other day saying that in the future, or potentially even now, the end user of Ethereum will no longer be human. And so it will essentially be the settlement layer of all the other rollups built on top of it. But as we already know, anybody that's interacted with the crypto space, for the end user, the gas fees are already starting to become untenable. So I think that's a really interesting take. And, you know, I'd love to hear your opinion on that.
I completely see that already. I mean, and actually a big proportion, and it's still starting to grow, of gas usage is already coming now from rollups. A bigger proportion is coming from bots who are arbitraging between different AMM pools, for example. But already, if you're a regular person wanting to do transactions on Ethereum, you're basically only doing them if you have to. If you have no other choice, you know, you have funds stuck there, or you get an airdrop or something else. But personally, I'm a fan of, like, I almost think we should all be boycotting Ethereum layer one now and like pushing to move over to other layer one solutions, or even like temporarily into other side chains like Avalanche, just because genuinely it doesn't make sense. And it's just like we're accepting pain of using Ethereum one at this point, layer one. But it's yeah, I think the future will be that ideally we avoid most people from even needing to go directly on layer one. For example, like a rollup which can pool to liquidity that's on layer one might make transactions there. So for example, already today on some rollups, you have this concept of DeFi pooling. You can do it with Compound on DeversiFi, where if you're a user who wants to get yield on Compound, instead of having to make a layer one transaction, you do it on DeversiFi, and actually hundreds of users can do that. And one single transaction is made onto layer one on behalf of all those users. So it saves, like, basically spreads the gas cost out. And that's the kind of relationship I can imagine, each of these rollups then having with layer one. But like, no, like, regular users should be doing that, I think, even in 6 months from now.
I completely agree. And, speaking of the problem of high gas fees, this is directly something that DeversiFi is solving, right? Am I correct in understanding there's zero gas fees on DeversiFi? How is that possible, aside from ZK-rollups? I mean, it's a pretty big value proposition for end users.
Yeah, so I mean, there are small transaction fees, but they're not paid directly as gas fees. So for example, if you make a swap, you still pay like a trading fee, but you don't pay an extra gas fee on top of that. And that's because the gas that's being spent, and actually like DeversiFi as like a roll-up spends a lot of gas on Ethereum layer one, but that's spread out across so many transactions that the fees kind of cover it without needing to charge users for those gas transactions. And that's kind of the biggest use case. That's actually when DeversiFi was first created, we were aiming at a slightly different audience. It wasn't to do with saving gas. It was the fact that you get a much better user experience. It's super fast. And that's because when we started building, gas fees were still like, $1 or $2. Now, when they're like, it's $100 or $200 to do a swap, we quickly saw, especially at the start of this year in January, like user numbers were rocketing up, and it was clear that people were just moving to avoid paying gas fees. And that's kind of now really almost like the number one value proposition, is that you can do all of this DeFi from your own wallet without having to like pay extra gas.
Yeah, and you touched on something really great in terms of the user experience. I think, previous to this interview, I messed around on DeversiFi a little bit, made a few swaps, and just to get a feel for the protocol. The user experience is amazing. It feels like you're on a centralized exchange, and it's done in a decentralized way. So talk to me a little bit about how important that user experience is to your business model, and then maybe we can move a little bit into the importance of decentralized exchanges as opposed to centralization.
Yeah, I mean, it kind of also comes from where we started off. So before we built DeversiFi as a roll-up, we built like an initial version that was just smart contracts on Ethereum, kind of similar to if you ever used them, like let's say like some of the earlier Ethereum dexes, like Ether Delta and like a few others, where like before Uniswap really became, and AMM pools became the biggest ones, it was sort of similar to those. And we got pretty good volume, a lot of users back then. Transaction fees were pretty cheap, but the user experience was still pretty terrible, because every time you did like a trade or a swap, you had to wait like 3 minutes for your transaction to get included before your balance is updated, and then you could do it again, and you weren't sure if it was successful in the meantime. I mean, that, if you compare it to a centralized exchange, even forgetting about fees and gas and everything else, is just such a bad and different user experience that decentralized exchanges really couldn't take off under those conditions. So that was really what we were initially trying to solve. And we looked at different scaling solutions so that we could get sort of instant transaction confirmation like you get on a centralized exchange. And that was why we first started working with Starkware, who hadn't launched at that time anything on mainnet, but they'd done a proof of concept that showed how a decentralized exchange could work using these zero knowledge proofs. And we were kind of the first to work with them, kind of said what we were trying to achieve. And they said, well, we're looking for someone to actually use this. And so we worked together for about 9 months on building like the first version of what we launched. And so, yeah, I think user experience is the number one thing that needs to solve for sort of real competition with centralized exchange. And I think that if decentralized exchanges can give a comparable user experience, the fact that you then control everything from your own wallet, that if the exchange goes offline, you still hold all your funds, like those differences will win long term. And people are getting used to now like using DeFi and doing it from your own wallet, and the extra freedom and control that gives you is great. And people are even willing, obviously, to pay a lot for that in terms of fees. But we're going to get to a point where you don't need to compromise, and you also get that extra control.
Yeah, I think that's such a great point about not having to compromise. I think any new technology needs to be either easier or faster or cheaper than its predecessor in order to be adopted. And so, we can talk about all these, next level scaling solutions, but until they really become user friendly, which they are at the moment, that's when the real mass adoption starts to happen. And that's when we really start to bring in, more people under the kind of crypto native.
Yeah, totally. I mean, like the one thing is I think once you're on to these scaling solutions now, it's already able to compete with centralized solutions. The biggest issue though is the getting onto them. And right now the experience, including for DeversiFi, like getting on, especially from Ethereum layer 1, is the worst part, because you have to pay your transaction fee to do that. You're kind of fragmenting, and maybe then you have some funds on layer 1, some funds on layer 2. You don't know, you forget where you've moved your funds to, and so that fragmentation and that barrier to entry is kind of the biggest thing that I think is holding up roll-up adoption at the moment. And we've seen this with Arbitrum, Optimism, and some of the other non-zero knowledge roll-ups. So these are essentially achieving the same thing but through a different technology. Is that because moving funds on is expensive and moving them off takes quite a long time, especially for those types of roll-ups. We're not seeing big adoption. And so the thing that's going to change that is when you can get your funds on and off from centralized exchanges or directly from fiat. And that's going to I think be a huge jump in then the adoption of rollups.
Got it. So if I'm understanding correctly, you're saying that the bridging from layer 1 to layer 2 is the biggest sticking point, or I guess inertia to get over for end users. Do you see a future, which I would hope we do, where the consumer doesn't even realize that they're bridging from one layer to another layer, or they're moving from one chain to another? I feel like it amplifies how early we still are in the space, the fact that we need to still bridge from one protocol to another or from one layer to another. What's your take on that?
Yeah, I think that's very true. I mean, when there's, let's say, 100 million people using Ethereum rollups, they're not going to care what the rollup is, what the exact technology is. They're not going to even want to know necessarily if they're moving between them. It's going to be handled by bridges in the background. And I think that future will come. I do think we're much too early for that at the moment, and there still is a cost and friction to move between things. But yeah, I completely subscribe to this kind of multi roll-up, multi-blockchain future where you just have one wallet and it's all the wallet handles everything for you and kind of routes your funds wherever they need to go. And you can get a taste of that now if you use the right sort of wallets. I mean, even also in an ecosystem that I'm quite interested in, just because I think it is similar to how Ethereum might end up looking with rollups, is the Cosmos ecosystem. And if you use their IBC, which is their kind of bridging technology with Cosmos-based wallets, you do get a taste for I think how it will end up looking, and it's pretty quick and cheap to move, and you sometimes sort of hardly know you're doing it.
Awesome. It's so great to see these innovations starting to really come to fruition in the space this cycle. I think the questions in the last cycle that I got the most was well, how am I going to use it? How am I going to spend it? Where do I move this to? And so many of those solutions are already being developed at light speed by people like you in the industry. And so I think this market cycle, we've really started to see some promises being delivered on in terms of what we were really hoping for in the last cycle. So I thank you and the rest of the builders in the crypto space for that. So let's talk a little bit about DeversiFi. I mean, it's so much more, it seems, than just a cryptocurrency exchange. You can do swaps, you can invest. You have a launch pad as well, or and then let's maybe talk about some of the other features like pools coming soon.
Yeah, so I think we kind of really built out first the exchange side, because that was, I think, what would allow us to test the roll-up features. But what I see DeversiFi now as is a layer 2 hub, really kind of underpinning infrastructure which allows DeFi to happen on layer 2. And we've optimized everything for kind of, so for example, one way you could build a rollup is where you can deploy any smart contracts. And so there are examples of that with zero knowledge rollup like ZK-Sync. It looks the same as Ethereum. So if you're a developer, you can just deploy any smart contract. That's not what we've done with DeversiFi. With DeversiFi instead, we've optimized for like a more narrow range of DeFi actions, but then optimize those like 100 times more. So if you want to do a transfer of funds to someone else, if you want to swap, if you want to invest and earn yield, and like very, very soon, what we're launching in 2 weeks is if you want to become a liquidity provider in AMM pools, like you would now for Uniswap or SushiSwap, and trade on those, you can do all of that within DeversiFi. And actually other teams, for example, recently we had a team called Entropy Finance who did a launch pad sale within DeversiFi using that same like pool tooling that we've built. So they could offer their token, and like there was a decaying price, just like a balancer launch pool if you've ever used it. And people could, without gas, participate in that over the course of 48 hours. So basically we've built these kind of modular tool sets that are super optimized for layer 2 without gas, that then other projects can start to build on top of. And so we really are now basically focusing on how we can sort of expand this and make it so that it's very modular, and other like projects, for example, that might want to scale with layer 2 can do so within DeversiFi in this rollup.
Got it. Can I ask you a question about the economics of being a liquidity provider, especially on, you know, a layer 2 or a ZK snark or a ZK rollup? So, you know, it's my understanding that liquidity providers, for example, on a layer 1 like Uniswap, are directly benefiting from the high gas fees coming off of Ethereum, or the liquidity provider fees. Would it be, you know, fair to say that those liquidity provider fees might be lower on a lower gas fee type of exchange, or are we really just hoping for higher transaction volume and more fees that way?
So when you swap on Uniswap on layer 1, there's 2 fees that you're paying. One is a 0.3% fee that goes to the liquidity providers.
Got it.
And the other is the gas fee that you pay, which is like maybe $100 at the moment. So that gas fee doesn't go to the liquidity providers. That goes to miners, and it's extracted essentially from the value of transaction. And what that means is that actually you're only willing to, well, like let's say like the completely rational trader would only be willing to make a trade if their profit is going to be bigger than the gas fee that they pay. Mm-hmm. Which means the gas fee, you know, it has to be more than 0.3%, etc. And so that actually reduces, in theory, the amount of trading you're willing to do. So on these layer 2 AMMs, which are going to be launching at the start of December on DeversiFi, liquidity providers still earn the fees, but the traders don't have to pay that extra fee to miners. Mm-hmm. So actually they might be willing to trade more. And actually, in theory, there's actually a really interesting paper that was published about this topic, essentially you know, gas fees versus liquidity provider fees. But in theory, you can have smaller trading fees on layer 2 and still have more volume due to the fact that there's like less friction to overcome because you don't have gas fees, and therefore liquidity providers would earn a lot more. You know, obviously we haven't yet seen this really in practice play out, but I think there's going to be a lot of parameters therefore to play with. And in theory, because the friction's lower, we should see it be more profitable to provide liquidity. At the start, when we launch this, we're going to be incentivizing people to be liquidity providers with liquidity mining. So you'll earn like DeversiFi's DVF token also for doing it to kind of kick things off. But longer term, I think, it should be super sustainable, and there's a lot to play with because there is that difference with not having gas fees.
Yeah, that makes a lot of sense, and I appreciate the explanation like that. It seems like, you know, this would be the right place for more liquidity providers to start driving their liquidity to the layer 2s, because as we said, they're so much more functional than anything on the layer 1. But
you need like this, we kind of need to go past this like critical mass where right now, you know, if you come and trade on layer 2, there's less liquidity, and so there's less incentive to be a liquidity provider. So everyone's kind of stuck with this inertia on layer one. And that's also why we've designed, like, for example, this rewards program around the launch of these on layer two is kind of we need both the traders and the liquidity providers to move at once. And that's something that I think is going to be a real struggle for the whole like layer two ecosystem. But when it happens, and it will eventually happen, there'll be like a huge migration over, I think, to layer two.
I think that makes a lot of sense. Is there a date that we can look forward to for the launch of pools?
It'll start from the 1st of December, and then roll out. Yeah.
Nice. Well, what else excites you about the crypto space this year? There's been so much development, so much, groundbreaking innovation. What gets you the most excited about, the crypto space, call it 3 years in advance?
Yeah, I mean, I think there's been a lot this year that's played out, although a lot of it has actually, I think, been kind of more being worked on for the last 3 years. And then it's felt like a, really busy year where everything's launched. I think scaling and rollups is kind of the number one. But the other sort of really interesting one, which I think has come to awareness a lot more, is around privacy. So I think when we're starting to see this now a lot with airdrops and other things, but when all your transactions are linked together on Ethereum, and now there's a lot more transactions than just like holding a few tokens, people are doing all sorts of things. It really does become prohibitive for you not to have private transactions. And so that's something that I'm really interested in. There are quite a few like developments that are just starting to come online that will, I think, make all transactions through DeFi and through across blockchains private. A project that I really, really am interested in is ZK-Money, which is launched by the Aztec team, but it lets you essentially within Ethereum deposit DAI, wrap Bitcoin, and Ethereum and a few other tokens, and then shield them, and then you can send them to anyone with pretty low fee in a completely private way. And what I expect is that a year from now, 3 years from now, we will see all of DeFi be within these kind of shielded zones, where there may be some things that are desirable to be public, but most people's transactions and wallets would be shielded and private to them. And I think that's going to mean that the average person will be able to just have their wallet and have some level of privacy, just like right now we wouldn't publish our bank accounts on Twitter, which is kind of what happens, especially with for example, ENS, where people have even labeled their wallets and you can see them buying certain NFTs or dumping some tokens or whatever else, which is just it's fine when it's this small early ecosystem, but when everyone's using blockchain, I think that's just it's also a risk to a lot of people if they live in the wrong countries. I've met people who are just really scared about their safety because of the crypto they hold.
Yeah, no, I think that's such a good point. And maybe if I'm extrapolating, I feel like the ethos of crypto started in terms of being digital cash in a way where all your transactions weren't necessarily censored. They were on chain and they were open, but they were encrypted. But now with kind of on-chain sleuthing and everything else that comes with the development of the crypto ecosystem, that privacy is so much more important. So I think those are two really good things to look forward to, and for all of our listeners to really focus on in the coming few months and years. Will, what about DeversiFi is really exciting for you, coming down the pipe, and what gets you most excited about the development that's happening at DeversiFi?
I think on a big scale, we've got a huge sort of roadmap of features we're launching, but on the biggest scale, it's the fact that our team is now about 25 people. We've been building pretty quietly for the last 2 years, and we built a product and a protocol that we're really proud of, but it's still been up until maybe this summer pretty closed off, in that it was our company which created the protocol still being the one building on it. And the big transition that we're making now is, for example, with this, we're basically launching governance token DVF. It's kind of had a pre-launch. The main launch is going to be with the AMM pools, and then transitioning over a whole bunch of governance over the future protocol to community and users. And obviously this isn't new, that there are other protocols that have done this, but when it's your own thing that you've worked on for 2 years and you're actually seeing small parts starting to have more ownership from the community, and this governance takeover, it's pretty exciting. And I think it's really important for DeversiFi just because of what it is, in that it is infrastructure in a way. This is layer 2 infrastructure for DeFi, and the more open and decentralized it is, and the more ownership the community has, the more things can get built on top of it. So that's, I think the number one thing. And like with the AMM pools, like next month, there'll be a whole bunch of ways for like more of the community to get these tokens, including a retroactive airdrop, and people earning for like using the protocol and being liquidity providers, and also anything where they're adding sort of value to the ecosystem. So I'm just personally like really excited about that, because it's like, like it's been a long time in the making, but kind of handing it over and getting more community involved is just really exciting.
Amazing. The next question I was going to ask is, so are we going to see an airdrop? So some big alpha here from Will. You heard it here first. Get to use and DeversiFi, and hopefully you'll get you'll qualify for that airdrop. Will, it's been an absolute pleasure. Thank you so much for your time. Really look forward to seeing what you and DeversiFi do in the future. And thanks again for joining the Crypto Weekly podcast.
Awesome. Yeah, it was really fun.
Cheers.